Welcome to Explain the Charts, your go-to channel for actionable insights into the markets. Today, we're diving deep into Alphabet Incorporated, ticker symbol Google, as of July 31st, 2025, to provide an in-depth analysis of both the recent news and its corresponding chart data. First, let's look at the current events and news shaping GOOGL's trajectory, starting with its strategic moves in the AI and regulatory landscape. Google has committed to signing the European Commission's Code of Practice for the EU's new AI regulations, showcasing its efforts towards compliance and responsible AI development. Furthermore, its robotaxi unit, Waymo, plans to launch its service in Dallas by 2026, marking a significant expansion into a major U.S. city, which signals long-term growth prospects beyond core search. Meanwhile, Samsung Electronics is reportedly discussing integrating advanced AI services from firms like OpenAI and Perplexity AI into its Galaxy devices, highlighting the intense competition Google faces in the broader AI ecosystem. Now, let's consider the financial outlook provided by analysts and market commentators. A recent Forbes article from July 10, 2025, titled Google Stock to $350, suggests that GOOGL's stock could potentially double from its current approximate level of $180, reaching $350 or more. This optimistic view is largely driven by Google's robust performance in AI and Google Cloud, which has averaged an impressive 31% revenue growth over the last 3 years, with expectations of over 20% annually for the next 3 years. Analysts anticipate Google's revenues to surpass $500 billion within 3 years, with earnings projected to nearly double, fueled by enhanced profitability. Google currently trades at around 20 times its trailing earnings, significantly lower than competitors like Amazon at 36 times and Microsoft at 39 times, indicating potential for an upward revaluation of its multiple. However, the Forbes article also outlines crucial risks: escalating competition from AWS and Azure in cloud, and OpenAI and Perplexity in AI search, persistent regulatory scrutiny and antitrust actions, substantial AI capital expenditures, with $75 billion planned for 2025 that must yield returns, and macroeconomic factors like recessions or high interest rates that could curb ad and cloud spending. Wall Street analysts, based on 43 ratings over the past 12 months, hold a moderate buy consensus for Alphabet, with an average 12-month price target of $211.39, a high forecast of $240, and a low of $172, suggesting an upside of around 9.16% from recent levels. Despite 2 upgrades and 1 downgrade in the last 90 days, analysts generally favor Alphabet more than other companies in the broader computer and technology sector. Now, let's transition to the chart data for Google, starting with the daily time frame to grasp the broader trends over the past year. Looking at the daily chart from March 2024 to present, we can see Google experienced an initial uptrend in early 2024, pushing from the mid-140s towards the 170s by late April. A notable drop occurred in late April 2024, followed by a period of consolidation around the 160 to 165 range in May. The stock then resumed an upward trajectory through June and July 2024, reaching highs near 185, a level that would serve as significant resistance if breached from below. However, we observe a sharp downturn in early August 2024, with a large bearish candle on August 5th dropping the price significantly, potentially driven by the macroeconomic factors or AI expenditure concerns mentioned in the news. This dip found strong support around the 150 to 155 level, which proved to be a critical zone, seeing price bounce back multiple times after major sell-offs, establishing it as a key long-term support. Following a period of consolidation and struggle in late 2024, Google saw a strong recovery in November and December, breaking past previous resistance levels and reaching peaks near 195.40 in mid-December. This bullish momentum continued into early January 2025, briefly touching the 200 psychological level, but then faced another significant sell-off in early February 2025, marked by a massive red candle on February 5th with exceptionally high volume. This sharp decline, likely triggered by concerns over AI capital expenditures or broader market sentiment, drove the price down from over 206 to around 191. The 52-week high of 207.05, which aligns with the peak before this sharp February drop, now stands as a major resistance level to watch. After this February event, Google entered a downtrend, retreating to the mid-160s and even touching the 150s again in late March 2025. The rally in early April 2025, including a nearly 10% gain on April 9th with high volume, signals strong buying interest around the 150 to 155 support area, reinforcing its significance. However, another substantial drop occurred on May 7, 2025, again with extremely high volume, pushing the price back down to the 150s, highlighting the ongoing volatility and sensitivity to market news. From mid-May 2025 to the present, Google has shown a steady recovery, consistently making higher lows and higher highs, indicating a healthy short to medium-term uptrend. Now trading around 196.53 at yesterday's close. The current price is approaching the 197 to 200 resistance zone, which has proven difficult to break historically. Let's zoom into the recent price action using the 1-hour chart, focusing on the last few trading days leading up to July 30, 2025. On July 29th, after a period of consolidation around 192, we observed a strong bullish breakout, with Google pushing significantly higher on increased volume. This move indicates renewed buying interest and a potential shift in short-term sentiment. The price broke past the 193 to 194 resistance, establishing new immediate support levels. Now shifting to the 15-minute chart to examine intraday movements on July 30, 2025, we can see the stock trading actively around the 195 to 197 range. A notable event on July 30, 2025, was a sharp intraday drop from highs near 197.24 down to 195.62, followed by a slight recovery, suggesting some profit-taking or short-term bearish pressure. This indicates that while the overall short-term trend is upward, traders should be prepared for quick pullbacks and heightened volatility, especially around these higher price levels. The immediate support on this shorter time frame is around 195.00 to 195.50, and resistance is at the 197.00 level, which was tested and held on July 30th. Considering both the fundamental news and the technical chart patterns, what are the reasons to be bullish or bearish on Google? Long-term bullish arguments are strong due to Google's leading position in search, continued dominance in digital advertising, and the accelerating growth of high-margin segments like Google Cloud and YouTube, especially with the AI boom. The analyst consensus for Google remains a moderate buy, with an average target of $211.39, and some predicting over $300 to $350, suggesting significant upside potential if these growth drivers materialize and valuation multiples expand. However, the short-term outlook carries more nuanced risks. Reasons to be bearish, particularly in the short term, include intense competition from other tech giants in AI and cloud, the ongoing threat of regulatory scrutiny and antitrust actions which could lead to significant fines or operational restrictions, and the substantial capital expenditures on AI, which must deliver expected returns to maintain investor confidence. Macroeconomic headwinds, such as potential recessions or sustained high interest rates, could also dampen advertising spending and enterprise cloud adoption, impacting GOOGL's revenue growth. For traders, it's crucial to watch for sustained breaks above the 197 to 200 range on the daily chart, which could signal a strong move towards the 52-week high of 207.05 and potentially higher. Conversely, A break below the immediate support at 190 to 192 would be a bearish signal, potentially leading to a retest of the stronger support levels around 180 to 182 or even the 170 to 172 zone. High volume during breakouts or breakdowns will reinforce the validity of these moves. Always keep an eye on broader market sentiment and economic indicators, as tech stocks are particularly sensitive to these factors. To recap, here are the important price levels to monitor for Google. The immediate resistance is in the $197 to $200 range, with the 52-week high at 207.05 serving as a major ceiling. On the support side, the $190 to $192 area acts as a crucial immediate support. Below that, stronger support levels are found at $180 to $182, followed by $170 to $172, and then the critical long-term floor at $150 to $155. For unbiased predictions, we believe there's a high likelihood, approximately 70 to 80%, that Google will continue its upward trend towards the analyst target of $211.39 and potentially challenge the 52-week high of $207.05. This positive movement is reinforced by strong Q3 earnings, positive updates on Google Cloud growth, and no major negative regulatory news. However, there is a medium likelihood, around 50 to 60%, of short-term pullbacks, possibly retesting the $190 to $192 immediate support or even the $180 to $182 level. These pullbacks could be triggered by broader market weakness, minor profit-taking, or if the upcoming AI capital expenditure reports are perceived negatively. Looking ahead, keep a close watch on Google's upcoming Q3 2025 earnings call for insights into AI product monetization and cloud revenue growth. Any new developments regarding regulatory antitrust cases, especially in the US and EU, could also significantly impact sentiment. Finally, monitor macroeconomic data such as inflation reports and interest rate decisions, as these can directly influence advertising budgets and investor appetite for growth stocks. Your vigilance in observing these factors will be key in navigating GOOGL's movements in the coming weeks and months. Thank you for tuning in to Explain the Charts, and remember to conduct your own research before making any trading decisions.